Hello, traders. Cousin Vinny coming to you from theclosingprint.com, July 23rd, 2023. In this edition of your weekend video newsletter, we'll discuss the big cap tech and indices, all of which faded a bit last week off of highs. In addition, this is a big week for earnings with over 30% of the S&P 500 reporting.
There you go.
Sector rotation was evident last week. We can see energy catching a bid along with real estate, consumer staples, materials, and utilities, with energy showing a potential breakout along with strength in consumer staples and utilities. Healthcare was very strong, so our go-to favorites like Johnson & Johnson, Merck, and AbbVie all looked very strong last week with volume picking up. All of these look like they're going to follow through. As we start earnings, we'll be looking for these stocks to show relative strength with utilities, healthcare, energy, staples, real estate, materials, and industrials leading, with consumer discretionary, communications, and tech look like they're going to rotate back in. With sector rotation evident in the markets, we're not falling off. We're just consolidating recent gains in time. Now that could change on Monday, so we'll be waiting for a clear directional setup going into this week's trade. We do note support levels below 4,500, 4,450. We got a 236 Fibonacci level from the October low up to the recent high. Right there at the 21-day moving average. RSI is still very strong. MACD and stochastics are at highs. Stochastics embedded. Volume was well above average on Friday as there was some rebalancing to end the week. Big cap tech did see some profit taking and some rebalancing there as well. We're still up 53% from the October lows, closing down less than 1% for the week. That said, the Dow, the IWM, and the NYSE all led last week, with the Dow up over 2%, the New York Stock Exchange and IWM up over 1.5%. Considering that strength, we do focus a lot on the New York Stock Exchange. This is the new highs minus new lows. You can see we're above the zero line in the histogram, and the black line is making higher highs and higher lows. But more importantly, the New York Stock Exchange, 2,700 stocks, is making higher highs and higher lows, and advanced decline is at highs with breadth advanced decline percent readings above the zero line, going into a week with earnings that could be quite volatile. Starting the week off, we have the bond stock ratio between the 10-year bond and the S&P 500 dropping, which is bullish for equities, with the caveat that we need to keep an eye on the 10-year yield. That did bounce 2 weeks ago, faded right back to the 200 and the 50-day moving average. So if this was a stock, we'd be looking for a breakout to the upside. Watch RSI. If that drops and we get MACD and stochastics to stay down here near oversold, maybe we could see a test of the 50-day or a drop below. If that were to be the case, then we would be bullish. If it starts to bounce and rally through this 4% level, that's an area where we'd be concerned and most likely would be taking profits into strength during the week. The same could be said for the dollar, which did bounce at the bottom of this descending or bearish pattern. We could see a move back up to the highs. That would be a headwind for equities in the first few days of this week, especially if you coupled that with the 10-year yield rising. So we want to see both the 10-year and the US dollar roll back over. And we'd like to see the crude oil products and sectors also pushing back. They've been rallying for the last 4 weeks on volume, with the U.S. Department of Energy putting proposals out there for these that were depleted late last year. And finally, we'd like to have the CRB index continue this fade lower, with any rally adding some potential pressure to this particular chart, with stocks currently outperforming commodities. So we want to see this continue in the coming months. So those three are the bearish signals for the week and the caveats for the bulls, commodities, the 10-year, and the US dollar. We want to see all of those back off and for earnings to beat to the upside. Starting off the week, we'll be watching these stocks below the IBD 50 list. IBD stocks showing relative strength and stocks that have oversold stochastics for potential follow through. I do have asterisk next to some of these names that I noted had above average volume. Could be that it was due to rebalancing. I don't know exactly what the story is, but many of the semiconductors in particular saw well above average volume, like CLAC. Same with LRCX. So I'm thinking this has to do with rebalancing on Friday. Texas Instruments. If you recall, last week we were looking for a fade that didn't materialize. Monday, Tuesday, Wednesday were fairly strong. Thursday and Friday were a fade. Well, again, this week, it looks like a lot of these stocks are extended away from the 21-day moving average on the IBD 50. I am looking for some of these to back off, so the setups aren't as good this week. A good reason to wait for a clear directional setup on Monday as we go into earnings season. With 30% of the S&P 500 reporting, we want to be very cautious and look for those sectors that were strong last week, like real estate, healthcare, consumer staples, utilities, and energy, to show signs of a follow-through before acting. We're seeing a lot of stocks like the travel and leisure names, Carnival Cruise Lines at the 21-day. We also saw Norwegian and Royal Caribbean both holding on to the 21-day. Royal Caribbean looked the best. It's back above the 21-day. Stochastics turning up. Of the three, I like this one the best, while looking for Carnival and Royal Caribbean to follow suit. Uber is also on the IBD 50. I'd like to see more volume like we had back here in late April. Aside from that, the stock is trending, pushing off the 9 EMA, so I'm looking for a follow-through on Monday in Uber. And we also noted that although some of the bigger cap names like Microsoft, Nvidia, and Meta faded due to rebalancing, other tech stocks like Adobe are trending. The volume was well above average on Friday, so this is probably rebalancing as well. We had Airbnb showing unusual strength, breaking out. Look for the weekly to lead us as we're above the 10 EMA. Volume picking up over the last 4 to 5 weeks with rate of change turning up. This is just starting to accelerate. Okay, I wouldn't chase it, but look for setups potentially on Monday. While other stocks from the group like Vornado is trending, Boston Properties is trending. Note that buyers stepped up Thursday and Friday. I'm looking at the wicks underneath the candles and a close in the upper half of the daily range. Along with Jones Lang LaSalle, very similar. Look at the volume here for the last 3 or 4 weeks. Trending 921 or above the 200-day. The 50-day most likely crosses through in the next couple of weeks. Real estate's fairly strong. Healthcare, pharmaceuticals, medical devices, those all look very strong too. So if you have any of these as swing positions, keep an eye on earnings dates. Most of these look like they'll follow through. Innoviva, a healthcare related name, biopharma, and fairly inexpensive. This one stuck out on a scan. I noticed that stochastics was turning. MACD is crossed, volume picking up. It is a relatively low volume trading stock, so I like to see above 200,000 or 300,000 shares. That said, it looks like it's going to head back up to the 14 level in the short term. It has about a 30-cent, it has about a 25-cent ATR, so it's a slow mover. Something I happen to notice on the scans. Additional pharmaceutical stocks like Bristol Myers Squibb following through, looking for that to continue. Johnson & Johnson, Merck, would like to see all three of these following through, along with AbbVie. Merck coming off the 200-day moving average, volume picking up. This is showing signs that institutions are interested again as the company completes a descending channel. Finally, it bears repeating that We do have a big earnings slate for this week. 30% of the S&P 500 is reporting. We did note that the call walls held on Friday, with the exception of IWM, which dropped from 200 to 195. In addition, with 25% of the gamma for the S&P rolling off and about 30% on the Qs, we would expect increasing realized volatility heading into this week. And at the very least, the market will be more fragile and vulnerable to damage from shocks such as earnings surprises or headlines. So going into Monday, we'll wait for a clear directional setup and look for some of these stocks to follow through this week, while anticipating we could start off with a little weakness. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com, your weekend video newsletter for July 23rd, 2023. I had some problems with MailChimp, so I'm not sending out emails this week until I find another solution, since only about 30% of you actually look at the emails that I send out anyway. Check the watch list channel before the open tomorrow. Take care, have a great evening, and I'll see you on Monday.